Hi traders, and welcome to my video on the supply and demand zones indicator. I'm going to give you a breakdown of this indicator and the different ways you can interpret it to implement it within your trading strategies and to capture moves such as this one for over 100 pips. Okay, so I'm using the MT4 trading platform here. This is a euro dollar 1 hour chart. You can use this strategy on any trading instrument, Forex, stocks, cryptos, commodities, indices, etc., and any chart time frame. Okay, I'm using the 1 hour chart here simply because I prefer higher chart time frames, 1 hour, 4 hour, daily, weekly, monthly. That's because they contain more price data, which from my experience can give more reliable trading signals, especially when we're considering supply and demand zones. Okay, the more volume we have to analyze, the better. So supply and demand zones, what are they? They're basically areas of, let's say, support and resistance. Okay, so the indicator marks these areas on the chart. Okay, with these gray boxes above price are the supply area. We can expect perhaps a bearish reversal or bearish momentum when price reaches these supply areas. And the areas below price marked by these gray boxes are the areas of demand. You can expect bullish movement, buying power. Okay, what I wouldn't do is I wouldn't just buy and sell every time price reaches these zones. Okay, the indicator does do a good job of giving you potential entry points. I mean, you see this lighter gray here. Okay, this area is for a potential buy. Okay, and the same would be for above. So when you see this light gray here, it's an area for a potential sell. These are basically the strong levels of supply and demand. Okay, so for instance, we can see this trade setup here would have been a straightforward, the price reached this area here, okay, moved upwards, and then as price fell back, it doesn't have to always fall back right into this zone, but as it did here, this would have been a buy signal. Okay, and we could have taken that trade, perhaps placed the stop loss below the low here, previous low. Okay, so after that candle touched and came back up, we could have maybe entered here with the stop loss just below the low there of around 15 to 20 pips. Okay, and this trade would have currently been good for 100 plus pips. Okay, we could have locked the trade in at break even as price continued to move in an upwards trajectory, and also used a trailing stop. So for instance, after this pullback and then this big continuation upwards, we could have moved our stop loss from this area here up to here. Okay, and then after this pullback and this continuation, our stop loss could be moved below this low here. Okay, one thing I will say about this indicator is it's open to interpretation. I mean, you know, what zones shall we look at? They do give you multiple zones to consider. For example, we have new zones forming here, and we have a recent one here. Then we also have the longer term ones here. So if you just look at it as short, medium, and long term support and resistance, that's how I would personally do it. But I actually don't use this indicator in my day-to-day trading strategy simply because I prefer to draw my own support and resistance lines like that, for example. Okay, you also have resistance there. You actually have a nice wedge formation there. Okay, so that is a W pattern as well, down, up, and a breakout to the upside. So I feel like I can have more control when I'm drawing my own support and resistance levels rather than relying on these supply and demand zones. It's worth mentioning as well that these can repaint. Okay, so repainting means they basically change after the fact. So just to illustrate my point, if we zoom out of the chart, okay, these all look like perfect entries. You know, you could be thinking on this downtrend, if I sold every time price went into this zone, I would, you know, I'd have a crystal ball basically. But one thing you'll notice is these zones will change after the fact. Okay, that's what a repainting indicator does. For example, I run this through the strategy tester in the MT4 platform, and there were demand zones popping up here and here and here, but they would just disappear. And as price continued to fall, the demand zones were just recalculating and ending up in different positions until finally price pulled away for good, and then the demand zone, as you can see, stayed where it is. That being said, if it does stay where it is, that can be a trigger point for entering a trade. However, I would much prefer to use my own market analysis, perhaps candlestick patterns, and of course, good money management. You do have a 3 inside up candlestick pattern here, so the price bounced off this support level. We had a bearish candle followed by a bullish candle that was at least 50% the body of the bear, and then a further bullish candle that broke above the initial bearish candle. So this could have been a signal around here. You had a mini pullback on this upwards move and then a continuation. You also had a breach of this resistance come support, which could have been an entry, or could have waited for the breakout, the pullback, and then entered on the continuation, whether that's there or here. Okay. So this indicator, if you don't already have it available in your platform, supply and demand zones, you can probably find it somewhere online. I downloaded this one for free. You can amend the colors as well, but just going back to what I was saying regarding the zones repainting. If these were accurate all of the time, okay, and they didn't repaint and you sold every time it told you to, you'd think you're onto a winner, right? You've got the perfect indicator that's going to always give you the perfect entry. It's just not the case. Instead, what you can do, and what I do, is I find a trend like this, downtrend, okay? Resistance, prices touch resistance here 3 times, triple top formation, okay? Got our support line here. Perhaps you can do your long-term support and even shorter term here. Nice M pattern formation there. If we zoom in, we can even go real short term there. See the breakout to the downside, breakout of that trend line, breakout of this one. Okay. Support becomes resistance. And pullback. So lower highs, pullback, support. Okay, that's a nice bearish flag pattern as well. So it looks like an upside down flag. You can see there. And a breakout below. There's no coincidence we have these big candles around the breakouts. Okay, traders are watching these moves. They're looking to get in on this trend. And so the next best thing to, well, an indicator that could show you the exact best time to sell and buy, in my opinion, it is trading with the trend. So we're only going to sell in this instance, and trading breakouts of support. So you can just mark your support levels. Breakout, you can see that big candle there. Traders are watching these levels. Again, there, big downwards candle. That's a NFP non-farms payroll first Friday of the month candle. Nonetheless, we can hop in on the momentum from that candle. You can see market making lower highs. Got a nice diamond formation there, or a wedge pattern, and breakout to the downside. Even earlier, you can see here as well. Support, breakout to the downside. That support level then becomes resistance. Ample opportunities to enter on this trend. We don't need a technical indicator to pinpoint these entries. Again, draw your support level, M pattern, breakout to the downside. I do have lots of videos on the M pattern, the opposite of it, the W pattern, the triple tops, double tops, triple bottoms, double bottoms, candlestick, other candlestick patterns, so on and so forth. So subscribe and make sure you check them all out. The more you can be aware of price action analysis, I think the better. You know, it doesn't repaint like indicators. They're not lagging like indicators. It's telling you what the market is doing at any given time. And when we capture a big trend like this, okay, we can, you know, capture big moves, and we don't need to spend all day chart watching. You just wait for nice setups, and yeah. Maximize the trend is your friend. Just ride the trend. Okay. Don't be lazy. Draw your lines. and you can get ample opportunities to trade into a trend. You don't want to sell or buy too, you don't want to sell too low or buy too high. Okay, we're approaching, there's ample opportunity throughout to enter this trend. You don't want to sell at the low. Okay, perhaps there's just a little bit of gas left in the tank after this move, and arguably this one, depending on if you're day trading or swing trading. But if we zoom out and look at the overall picture here, I mean, it does tie in nicely with the supply zones. Like if we were selling on the supply zones, but the indicator wouldn't necessarily have been there during that time. There will be times when it will be and it won't repaint. Potentially here we're seeing a great example of that. This demand or this buy zone here. Okay, it's a good example, and we covered that trade at the beginning. You can buy in the zones or sell in the zones if you wish. We'll get it right sometimes, as long as you've got good money management. And I like to cut losing trades short and let winning trades run. For example, if we took, say, this breakout to the downside here, slight bull trap there as well. A bull trap being traders were trying to buy into this upwards move too late near the top. Stop losses were getting taken out. Those who were in earlier taking profit off the table is causing this downwards momentum. We get the pullback and we enter on the breakout there. We could have had our stop loss, 10 pips above that recent high. And if we look at how far this move went, almost 400 pips, it would have been ample opportunity to bank on the way down that trend. Even if we get it wrong with a tight 10 to 20 pip stop loss, you can be wrong, multiple times, knowing that when you do catch a big trend like this, you're going to maximize it as much as possible. And to do that, what I don't do is I don't panic and go, wow, look at this, the market's dropped 50 pips, let me exit the trade, I'm rich. No, when we get in a good trade, we want to stay in it for as long as possible. Well, I do. So if we had here I don't know, say 15 pip stop loss, I'm not going to say, I must use a 2-to-1 risk to reward ratio and exit after 30 pips, because then you'd be exiting here and just leaving all of that on the table, right? So instead, we just trail it. We just use a trailing stop and put our stop loss above the high, 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 above the high. And then when price does eventually turn back, if it takes out our stop loss, we've still got over 300 pips. Nobody's picking the exact point of the perfect exit right at the bottom there. But you don't want to just leave your stop loss lingering around here somewhere. And if price turns up, as it is at the moment, if it goes all the way up and takes out your trade for a loss after all that profit potential, you'll be really disappointed. Money management is important and often overlooked, along with discipline and trading psychology. Okay, and other ways to look for an exit. Well, the market's making higher lows here. You can see all this consolidation is just indecision, and we have a breakout to the upside, potential bear trap going on. So there were indications that it perhaps was time to exit this position anyway. A bear trap, which is basically the opposite of a bull trap. There are probably traders still trying to jump in on this downtrend around here, right at the low. And they're just getting eaten up. Maybe their stop losses are being taken out. Traders who were in earlier are exiting their positions, and it's causing this upwards momentum. Okay, but I've gone a bit off topic there. I know this is the supply and demand indicator video, but I do think it would be a shame of me not to give this information and just to pick these things out if I'm seeing them obvious on the charts. I'm not going to just load the indicator on and say, look, it's amazing, sell every time it tells you to, and it's gonna, it's a banker. It's not the case. You need to be aware of support and resistance, trend lines, candlestick formations, good money management, discipline, psychology, things like this. There is no unicorn indicator, but the principles behind it are good. So let's just say, like, it can pick support and resistance areas quite well, but then I don't think it can do them as well as the human eye can. And if you look how I've drawn my my lines on an angle here, as well. Support and resistance is not always as rigid as, you know, a horizontal line. Okay. Hopefully you found something useful in this video. I do appreciate you watching. If you can like and subscribe, that would be great. And I hope to catch you on the next one.